Hello and welcome to a quick update about the NASDAQ. The NASDAQ has reacted really positively to the orange support area, and the NASDAQ has also reacted very nicely to the white support zone. That was the additional target area. Okay, so we talked in the previous video about the structure, and I highlighted to you that I would like to see that fifth wave down, which happened, and ideally this C wave of wave 4. So the idea is we're in a wave 4, which started here on the 12th of February. Ideally, the C wave should react to this white zone. Yeah, that is sort of an ideal target zone, an additional area of interest. Yeah, for example, oftentimes two key levels here, I always mention. A C wave often has the same length as the A wave. I mean, not always 100%, but sort of it usually ends in that area. That was here 17,449. Price reacted to that level. Yeah, okay, it dropped a little bit lower, but actually reacted to the ideal target for a fourth wave. I believe I did actually mention that in the video. 17,385. Absolute key level for a fourth wave because most fourth waves, react there. And also we wanted to see 5 waves down in the C wave. So we had from this 12th of Feb high in a third wave, we had this ABC structure to the downside. We had this ABC structure to the upside, which formed a B wave, reacted to the Fibonacci resistance area. And then I highlighted to you, we need to see 5 waves down now to complete the structure. We did that actually. And this pattern, I have to say, it is much more beautiful and it works much better than on the S&P 500 chart. Bit of a mystery to me there. Well, not a mystery, but there are, basically the problem on the ES chart or the S&P, it formed a similar structure, very similar structure, also a fourth wave, but it might have ended in a so-called truncation, which means even though we also had 5 waves down, but the C wave ended above wave A, or it might be forming a triangle. So whenever you see such a discrepancy, which indicates that potentially on those charts, the correction isn't over yet, potentially. I'm open to the idea it is, because we're still watching for higher on both charts, but it just means we just need to be a little bit more cautious. But the NASDAQ, for it, taken by itself, looks really good. What I'm interested now to see is how the market will react to this trend line. So if we go back to the 1 hour chart, you see this, delete that. You see this trend line, this ascending trend line, see if the market reacts to it. So obviously, is the low in or not? That's the main question. I mean, at the moment, there's no reason to believe it's not. It's just that from a confirmation point of view, I can't really confirm it, but it will become much clearer if we see a break above the Friday high at 18,030 points. Obviously, it's done everything it needed to do in the correction. It even reached the ideal target and completed, from a pattern point of view, everything perfectly. So very open to the idea the low is in. Just a little bit cautious because it doesn't really match the S&P 500 pattern. But there are ways around this, and it's not, there are ways around this. It takes now a break, as I said, above that B wave high at 18,030, followed by a break above 18,125 to confirm the fifth wave is unfolding into the $19,000 range. So it was just a quick update, no long update planned. So hope you enjoyed the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as updates about stocks, then check out our S&P 500 and stock service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.